Hello and welcome to BloombergQuint. Hi, this is Nikki. Cost pressures and weak volumes led to 24% decline in Shree Cement's EBITDA performance. But how is the outlook shaping up? Let's find it out from the managing director of the company, Mr. HM Bangur. Hello and welcome to BloombergQuint. I'm going to start off by asking you about the cost pressures because that's probably the kind of amount that we've seen. We've seen an upping coming in on the cost 6% sequentially. What explains this? And can we assume that the cost pressures have now peaked out for the cement industry as a whole?
Cost pressure was suddenly from like this, about 2.5 times to 3 times the energy cost of diesel or the coal all has increased. Petcoke, diesel means here petcoke or the coal has increased, and that the pressure was real because the prices or the cost could not be passed on to the consumer. In commodity, this is the way. Going forward, prices of energy is again increasing. How much it will increase? It is definitely lower than the last quarter at present, but the trend is increasing. So we just don't know whether the worst quarter is over or it will be there. Obviously, the good part is that the demand is there. Partially, the costs have been passed on. Still, the prices are lower than last year, April. So prices will go very gradually, but the cost goes up suddenly. That is the real problem.
Sure. Let's talk about the volume performance since you've also spoken about how demand is stacking up. For this quarter, we have seen the volume decline a little more larger for Shree Cement as compared to something like a Ultratech or Dalmia for that reason. Probably the key operating regions have been hit, but what can be expected going forward?
The volumes were definitely much lower than we also expected because there was 40 days strike in our integrated plant in Chhattisgarh. The transporters were not moving any material. Especially, we were affected along with one or two small other companies who doesn't have the railway siding. We have a railway siding which is hardly 20 kilometers away, but they will not allow the material to move up to railway siding also. So that problem is over, and now we can expect definitely much better volumes compared to last. So last quarter, the volumes were affected in the south, affected in the east. That was the big reason.
So where are the, which are the pockets of growth this quarter onwards where you see maximum demand picking up?
Demands will pick up, but in east, south, north, everywhere, because basically you see cement is a factor of GDP growth, and GDP now is growing. The worst of corona and all other negative GDP growth, that phase is over. So with the low base effect, I think in 2 years' time, our cement demand should grow by 20%.
Okay, and for the next quarter, what is the kind of growth that we can expect sequentially?
Sequentially, 9%, what was less will be there covered. We can expect about 15% growth, I will say.
Okay, so
but
what would be a 15% growth sequentially overall for the volumes, right?
Right.
Fair point.
Oh, thank you.
Okay, also I'd like to talk about the capex because the company has been commissioning a 3 million ton capacity in Pune on 1st Feb. I mean, there has been a capacity expansion which has been taking place. What is the kind of capacity are you targeting for FY25? What is the kind of market share that you're looking at? Any ballpark view on that?
Capacity, we are planning a greenfield unit in Rajasthan, Jhunjhunu district. That should be commissioned not by the March 22, but not by March 23, but it will be commissioned before March 24. It is a big unit, all greenfield, so a lot of infrastructure is needed there. But in the meanwhile, we are putting up a grinding unit in West Bengal, Purulia. The work has started. That will be commissioned before March 23.
Okay. And also, a ballpark view of what kind of market share you think you would demand going forward in the next 3 years for FY25 kind of capacity that you're looking at?
We will like to grow in 3 years by about 30%. Now, that will be good for us. If market share goes up or down depends on the proactiveness of other players. So here I will not be able to say what about the market share. We can talk about us and not about others.
Okay, so 30% capacity expansion is what you expect in the next 3 years. Would it be safe to assume that your market share would be a tad better than what it is right now? And if you can put a rough percent to it also would be great.
No, I will not put rough, but it should be definitely better than this, because 30% will be our volume expansion. Partially it will come by better utilization, as the new capacity Pune has just started. It will take about a year before it is more operational. And that's all. I will not be guessing what will be the market share. That is very difficult.
Okay, a word also on the realizations, because blended realization overall for the company, they've been 7% up sequentially, which is way better than what your peers have done for that matter. Most of them have reported a flattish to negative kind of growth number. What can be expected going forward, and what are the drivers of the performance in this quarter?
This 7% is also has to be seen in this way, that we have sold whatever is sold, that is coming as a realization. But that is not the case. We have sold some of the coal which we had purchased. So, in fact, our realization has also gone up by only 2 to 3%. Rest is only the entry, whatever we have purchased and sold. So that is only an entry which is showing a much better realization. But the realization is flattish. In fact, only 2 to 3% higher.
Okay, so the maximum, I'm just going to repeat this question so that I get a little more clarity in terms of which are the areas of growth where you're seeing the demand picking up the most in the key operating regions that you have.
Now, key operating regions, the demand should grow better in East because the base is very low. In North, as the base is high, total demand will be growing at a higher number of tons, but as a percentage, it will be less. So
Sure.
you will be looking at percentage, we look for the absolute volume also. So there is a disconnect here, but both, I will say East will grow as a percentage and North will grow as absolute volume. So both put together, and our Pune unit will give us more working space in South.
Okay, I'm going to just repeat and touch base again on the cost pressures, because that's one element which has been disturbing the entire industry as a whole when it comes to the international coal prices. You talk about the freight cost, all of them have been rising up. In the given situation right now, what is the kind of cost inflationary pressures that you expect to witness in this quarter? What kind of uptick are we looking thus far sequentially?
I don't think in this quarter the cost will go down in meaningfully, because suddenly we find that the coal cost has again started rising. Energy prices, which were very soft in the last quarter, suddenly we find here also in India that energy exchange prices are hardening up. So overall, I don't feel that there will be cost de-escalation. At best, small de-escalation should be there. Major changes will not be.
Okay, Mr. Bangur, more on the demand front and also the price hikes, because I think much of it will be taken care if the company or the industry as a whole manages to hike the price under cost inflationary pressure. What is the quantum that you're expecting when it comes to the price hike? Do you think the consumers have the kind of appetite?
Consumers price hike is needed. Otherwise, now you see the return on capital is important in cement industry. Wherever high capital industry is there, margin as a percentage of sales will be always higher. And sale as a percentage of capital employed is not even one time. For every 1,000 crore project, hardly 500 crore of sale is achieved. So you have to cover all the margins only on those 500 crores. So here important is the return on capital, not the margins. So return on capital has to increase, otherwise the new plants will not be viable. So prices have to increase, maybe in 1 quarter, maybe in 2 quarters. But without price increase, new industries cannot come and survive.
So you expect price hikes to come through in the quarter first and quarter second, thereby ruling out the chances of any meaningful price hike for quarter four, which is the strongest quarter of the lot for the industry, right?
Price rise, when it will take place, we don't know. But prices have to rise, otherwise at these prices, new capacities cannot sustain. Now it is very difficult to say that when that price rise will start coming up. If we see long term, then 5 year or 10 year or 2 year period, the price rise is less than the inflation or something like that. We always, when we talk of cement, we see price rise from the immediate past, from last month to this month. But when we see the price rise from 5 years back to now, the price rise is less than inflation for a 5 year period or 10 year period or such. So I don't think price is very material. Price will always be improving on an average by 5 to 6% a year. That is the inflation. If the inflation goes up, the price rise will be higher. Otherwise, the cement industry is very much price controlled in the sense that the price doesn't increase more than the inflation.
Okay, so just a follow-up question to that, you said, prices will have to catch up with the inflationary pressure so that the new capacities and the industry as a whole can survive with the kind of margins. What is the gap now between that? And when do you think this will turn profitable? So a ballpark range?
The ballpark rate for a decent return should be about 50 rupees a bag higher. But such price rise will not take place. Gradually, it will increase. The price lag is always there compared to the need. Because suddenly the price increase will not take place, that is not acceptable to either the manufacturers or to the consumers.
So for a 50 rupees per bag hike that we're looking at for the entire, to close the gap, how much you think the industry, not the company, just the
No,
industry is capable for quarter four and quarter one?
that in a commodity, the price prediction is highly risky and not very correct. Only after the event we will talk about why the prices has gone up or down. Right now, nobody knows. You will ask me to guess something which I don't know.
Sure, no, I'm not asking you to guess
And
estimate the
I will
number.
not guess. So basically, the price rise has to take place in 1 quarter, 2 quarter, 3 quarters sometime. But it will go on gradually along with the inflationary pressures. As the prices of everything goes up, proportionate prices will go up. That's all.
Okay, I'm just going to move my focus away from pricing power because clearly we kind of are still struggling to have a clarity on that front. But last question that I have in mind for you is a little on the macro front because the government is, given a huge thrust in this budget for the capex. With
Yes.
this kind of announcements which have come in, how much do you think cement industry would be different in this, in the upcoming next 5 years as compared to the previous 5 years cycle that we've seen?
Yes, the future seems to be much brighter. Now, this is the way we talk of industry compared to next 5 years. Because when you talk of the next quarter, nobody really knows. The government is really trying to build India. India needed lot of infrastructure. The first big project was Golden Quadrilateral by Atalji. And after that, everybody has seen the benefit, how the GDP has increased because of roads. Now, the whole economy moves on wheels. So, government is doing lot of work for Gati Shakti, rails, roads, air, ports. So, everywhere, movement has been focused. Right now, the real problem is that world over, logistic cost is 4 to 6%. Here in our country, it is about 12%. So logistic cost is the real thing. If it comes down, which is expected to come down by better infrastructure, our exports will increase manifold. We are competitive in production, competitive in planning and quality. Only logistic cost kills us. And if the logistic cost as attacked by the government is done successfully in time-bound manner, then India will be much better than what it is today.
And overall, for the industry, how different do you think that's going to be for the next 5 years if the logistic cost has been tackled well, new capacities have been coming up? What are the kind of margins then we can look at?
Margins are not important. Important, you are always focusing on the margins. That is not important. Important is once they was built up, the margins can come up and down. The market forces are sufficient to say what is the right prices. So those depends on the market forces. But the point is, once the infrastructure is there, how fast everything moves, how much tagless uh, with tag we can move on the highway, not having to do with the tickets every time, seamless toll tax. Those are the things. Government is doing continuously new things. Octroi have been removed. So many border posts have been reduced. All of them are continuously doing a good job for us. But lot of the things are yet to be done.
Is it safe to assume that the industry in the next few years will at least be focusing now more on volumes rather than the pricing power? Or you think the pricing power will still be dominant for the industry?
No, both are. Because for the revenue side, volumes are also important, prices are also important. So the focus will be, it will be a bifocal thing. Prices and volumes both are important. We cannot be concentrating only on one thing. And prices will increase, as I said, as in the past, depending on the inflation. With the inflation cost push, prices will increase. Otherwise, volume will be the thing. And we are very bullish about the volumes.
All right. Are you also bullish about your margins for quarter 4 and for the next year as a whole?
I was saying, just saying and telling that 1 quarter or 2 quarter, nobody knows. We have to talk of 5 years.
Sure, but
You are always, not you only, the analysts are talking of the next wave. And let us talk about tide. Tide is upwards. The waves can come up and down. 1 quarter is only a wave. When we talk of 5 years, it is tide.
okay, Mr. Bangur, we'll leave it at that. Thank you so much for taking out the time and speaking to Bloomberg Quint
Thank
as
you.
well.
Thank you.